It is Wes with Pikes Peak Trades. We are back with our weekend video summary. We have the end of a quarter. We've got the end of the month of June. We've obviously got the end of our last week of June, and all of that closing down the day on Friday, June 30th. And a really exciting place as we continue to navigate what I have been communicating for many months, that this is a bullish initiation. This is a primary impulse up, and the bull train is underway and it is going. There are going to be dips to buy, and I'm going to talk you through that. I'm going to show you what I think is happening in short-term market structure, but in the big picture, everything looks so good on the high time frames. Talking about the quarterly chart, I'm going to show you monthly charts, weekly charts across the board. You're going to get it all. Okay, so let's just jump right in here. And I want to do just a quick recap of what I had for you in the video last weekend when I said we're just going to have a week of big market moves. And that was right here at the close of trading on Friday. And then we had interesting rumors of a potential coup in Russia that never actually materialized. And I had told my group throughout the weekend, and even had tweeted it out, that that doesn't change the wave counts. It's just potentially a driver for a deeper pullback. Wasn't going to be there, but we were still prepared for weakness at the beginning of the week. And this bullish candle right here, though, this structure was not a bullish enough structure to get me thinking that that low was in, and we were ready to short this. We actively shorted here all throughout the day on Monday. I want to show you that on QQQ. We can see that corresponding set of opening candles on Monday. Now, it did kick me out of weekend puts because I thought maybe we were going to get an immediate move down. So this was a little bit tricky, but you're going to notice that this top from mid-afternoon Friday, it never broke. And along with that structure I showed you on SPX, that was where we had our clue that we were going to actively short, and we did, both in the newly opened Advantage group at Pikes Peak Trades, which is really my premium flagship group where you get everything that I do market-wide. Also in my $500 account challenge that we're running right now. We had a massive day on Monday. We ended up with these puts up over 50% on the account. We had another 50% day on Friday to close this week. So just some phenomenal moves. And then right at that end of the day, this structure to me looked done, and you can go check the receipts. I tweeted out at the end of the day a very good chance that low is in, and that is exactly what happened. And then we had tradable structure to the upside for the rest of the week, and then the setup right here. If you were following someone that said this was going to be a gap down into this, that was just not the correct market look. We were ready with calls, and we nailed them on Friday. And then we get right here into this position, and I'm going to suggest as we get back into these charts and give you a little more detail, I think we see weakness coming up here in the first week of July. It's going to be an interesting week because we've got a half day Monday. I think most likely probably a low volume chop fest, but I think we're going to go down. And then whether or not that finishes up on Wednesday, I'm going to get you into all of those details. But out of fairness to what I do and what I'm able to do with this work during the week, we've got to go back and we've got to review some of the really, really successful things that have happened recently. Okay, so now let's get into the meat of what we're going to look at here. And we certainly want to look at the SPX Quarterly and just take a look at these three bullish candles in a row. Bears had their chance in March of this year and they blew it. And you just go follow. Where do you see candles like this? You don't see candles like this that are working on some type of bearish bounce that's going to lead to a lower low. Now, the three that I think are most similar right now are the three coming off the GFC in 2009. We will get buyable pullbacks like this, and it is coming. I'll show you that on the monthly chart, and I'm going to have you ready. We will be ready for those. We'll identify by structure, by what I do, when and where those are going to take place. But we are in a primary bull and feeling really good about this channel working up for years to come here in this decade. And that is a train you want to be on. You want to be on it. Let's look at the SPX monthly, and you're going to see up almost 6.5% in the month of June. There were trolls telling me that June was going to be the best month for bears in years. Best month for what? For getting your account blown up? I mean, look at this move. Incredible kickoff here, right off of this mid-channel line. And like I'm saying, we will get viable pullbacks. They are coming. They're not there yet. The internal structure is not complete. I'll show you those details onto the dailies. Let's take a look at the Q monthly. And what I want to show you here is look there at that confirmed monthly MACD bull cross. I had told you at the end of last week it was developing, it was in the works, and here we are. And I've got these vertical lines traced out for you. Where else have we seen these monthly MACD bull crosses in the Qs? And they were not times for your general market thesis to be bearish. Okay, so as I've been saying really for months, you set aside your own personal bias and your own personal speculation, what you think is happening in the news, and you follow what matters. You follow price, you follow structure, you follow the technicals that I'm consistently giving you. And I've been on the right side of it now for months. You're going to see others out there trying to take credit for it, for getting on the right side of this just a few weeks ago. Well, good for them. It's tough to make that switch, but let's really give the credit where it's due. You want someone that not only called the bottom, but has called all the major moves going up. And I have no doubt we're going to be on the consistently correct side of that going forward. We want to look at weekly charts here and look at these. We've got outside bullish engulfing weekly candles. Now that doesn't mean we're not going to see some weakness coming up. We're going to get into that here in just a little bit, but just look how good this is looking on the high time frames. Things really are so healthy. Okay, so now where exactly are we? And I'm saying there's dips coming up. What am I talking about? Well, let me get you into a couple varieties of things that I'm looking at for where we're at specifically in these progressions. And I want to show you here the SPX. Okay, so we're looking at one version of how I'm counting here SPX. I'll show you ES and SPY here in a little bit. And my suggestion is that we are approaching here a minute degree top at some point. I want to highlight this very active upper diagonal. It's already seen 1, 2, 3 rejections and now a fourth hit. I think we are going to try to make a stabbing move up, but I think you can certainly expect a reaction here at that key area. So if I now take you now into that short term, we get you back here to the SPX, what I think we got right at the end of the day on Friday, I think we got the beginning of a first set of smaller degree wave 4s. And my suggestion is that we're going to move down. On Monday, it might be choppy, it might be straight down, but at some point, I think we're going to get a shortable bounce. And I'm looking at this very classic, 15-minute head and shoulders pattern. This is where I want to be looking for a reversal leg to get short. So that is actually my primary active trading thesis for Monday. Maybe this spills out into Wednesday, but then I'm thinking we're still going to have the opportunity to try to attack a little bit higher for us to try to challenge maybe that more full 1.618 fib. Okay, now in blue here, because we did get a high over the Friday, June 16th high, it is possible that that wave is in. And this could lead to a deeper pullback. And I'm going to show you where that could match up with a few other things that we're going to look at ETF-wise. But I do give that right now, at least, I give that a pretty distant probability just because I think where we're at in market structure, I think the pullbacks are more likely to be short as opposed to moving all the way back to test inside the move that happened in late May and early June. Okay, now I want to show you a couple different things that I'm looking at here in futures, and I really like the internals of setting this potential high in a smaller degree. I'll suggest that maybe that's an internal adjustment that I need to make on the QQQs. That does nothing, sets nothing against my bullish thesis. That's just an internal adjustment. You project, you monitor, and you adjust, and that's how it works here. The general trend and the general count has been accurate for months. That possibly we could get a move that comes back to maybe even fill the gap that we had in the cash market on Friday. But for now, I'm going to leave that upper target there and show that I think that ES would follow just that same path that I have here for you in SPX. Okay, now correspondingly on SPY, you're going to see that. And just again, is that 3 in place with the higher high above June, in this case, June 16, because SPY went ex-dividend on Friday, June 16th during that OPEX. That's one of the reasons why I've always thought that charting SPX is better. That ex-dividend actually took that spike high away, what I think is significant when you're trying to count this accurately. Is that wave in and we pull back a little more deeply? My suggestion here is going to be the very same that you're seeing, that we get weakness Monday, could spill over into Wednesday. We have a buyable dip, one move up, and then a few more buyable dips. Okay, now that's on the smaller degrees there. What would happen after that? So after that, a more substantial multi-day pullback. And that's actually going to lead me now, I'm going to step away from the Qs for a second, into our IWM, DIA, ARKK, XLF, because they're in really interesting situations here. Let me go ahead and start with financials, because as much as you might not like them, as much as really people don't talk about them except when they're going down, financials are so important to a healthy market. And they had just a pushing close against a key moving average cluster here on the weekly and a potential resistance diagonal. And if I zoom you in a little bit onto that daily, it is actually above that. Okay, now we know IWM, XLF, big laggards here. And certainly for my general market thesis to play out, they're going to have to play big time catch up. And that's why I think the count that I have in SPX with some smaller degree pullbacks as it extends up is going to give time for XLF and IWM to actually play some catch up. So that is part of what I wanted to share with you in this video. Is I do think we have a good chance through the rest of summer into the fall of a big rotational change into industrials, into small caps, and into financials. Okay, now where exactly are we? So I think we set two key higher lows here at the end of May and at the end of June. Do we see a more full pullback against what happened this week? And that's really where here the pullback areas, I can speculate them and chart some possibilities, but that's really where you want to be with me actively during the week so we can pounce on these as we see them. And that's what the people that are with me in the PPT Discord community, that's what they get from me, the ability to see that during the week and actively adjust. So I'm looking for a similar move to what I just showed in SPY. We had a couple nasty candles here that closed on XLF. It's not done. A move down, a shortable bounce, then another move down. And then will this final stab up, will it set that more buyable higher degree? This is a degree 2, not a small degree 4 for financials, and you'll see that for the rest of what I'm going to show you here in a bit. Now, something extremely interesting is the island reversal gap that was created with Friday morning's big gap up that we nailed, that we were ready for. It would be extremely bullish for this island reversal in XLF or in any of the other main ETFs to actually remain open on any higher degree pullback against the late June low. Extremely bullish. But I've got the possibility here in blue. Like I showed you on SPY, what if we get a deeper degree pullback right away? It has to be on the table that we actually do close and fill that gap and move back into here, possibly into some fresh demand, but that would take it probably back towards 33, and that would be a little bit painful here during the week. You're going to see that as a theme in what's upcoming next. Okay, so DIA, and we've got DIA, a bullish engulfing weekly candle, fits the theme. High time frame charts are in such good shape. Does that mean we immediately just move up and out? And I'm going to say not so fast, my friend. I think we have to be ready for the possibility that we do need potentially just a testing back of that gapping area. And we're going to see that here again on the short-term chart. So everything that I do market-wide, when I create market plans and a trading thesis, is I want confluence, and I'm seeing that potential confluence for some early weakness on Monday with the potential that we get something a little deeper. Okay, now if we get a buyable dip here with some ways that I'm good at identifying lower risk opportunities to trade a bullish reversal structure, and we get that new swing high above Friday's high, then are we looking at kind of this classic small time frame cup with the handle? See that on XLF. We get a cupping move. Do we need the handle pullback? It would just be classic. It would just be what you expect. It's not bearish. It's the way that markets gather steam. It's the way they work off short-term overbought conditions, and they bring in more opportunities for buyers at slightly lower prices. Let me show you some more. So I'll just go right into IWM. Same thesis here. Big cup. Here we have possibly a pullback, challenge low, one more swing high, we set the handle. Or does it happen immediately? Very clear possibilities. I don't have a crystal ball to give you 100% predictions. That is not what I do. I give you market-defined probabilities for movements that play out accurately over time. Now, on the higher time frame charts, you're going to see that need for IWM to play some extreme catch-up. It's a sketchy daily candle here. This is the worst daily candle, along with ARKK, of these major ETFs. Is that begging for that pullback? And that's why it's got to be here on the charts, that we don't immediately extend bullishly, that maybe we actually get in a shortened, lower volume, maybe lower liquidity, holiday week. Maybe we get a resting move right here. Okay, into ARKK. And I had shown that potential of a bullish engulfing weekly candle, just like DIA, and small caps got it. Growth stocks here got it. But again, are they there? They're knocking on the door of the big breakout. I don't know if they're quite ready immediately to go up next week. We've got a couple sketchy daily candles here. Do we pull back? Do we let price settle back in here to around 43? On the small time frame, you're going to see the same thing. So I'm projecting a little bit of weakness, a move up, and then we get a cup, and then we get a handle. Or do we get that 1-2 right here away? Okay, so that sets for you everything right there from the main ETFs. Now, I wanted to save the Qs for last because I do want to show you big tech, and I want to show you how I think some of the names in big tech are set up for some early weakness, some buyable dips. Remember, the bull train's moving. That doesn't mean we're not going to have some speed bumps on the way. And so let's get into the Qs. Okay, now this is going to be interesting for us because I've been charting Qs in a different degree. And I want to talk about how some technicians that you're seeing out there are calling this low in the middle of March, this higher minor 2 degree low. And when I look at the Qs, that doesn't agree with me. That this doesn't agree with the same degree in EW as this on SPX. So I feel good that this is in fact a different degree 2, that I've got it charted correctly internally. Now, the question is, are we sinking in the same degree of that low? And that is initially where I had placed this high as this what's called minute. It's the circle symbol. It's the minute degree top that would match this March degree low. It is possible that I need to slide everything up to get it better in line with SPX, but I'm not going to do that. I'm going to let the market tell me the magnitude, the duration of the next pullback to actually make me make that adjustment, because this is tracked so well on both the Qs and also here on the NASDAQ. It is just tracked so well for weeks and months on end. This is now my thesis that I think possibly big tech tops first, and that would give the rotational catch up to XLF, DIA, ARKK, IWM, while big tech takes a little bit more of a rest. SPX, because of the heavier weighting in those other sectors, the industrials and the financials and the small caps, would actually then progress in a little more aggressive count. And this is speculative, but I kind of like how that seems to fit with where we're at with other sectors right here in this market. So this degree and this count are going to remain. But again, I do have some aggressive targets up here still in the Qs, and also a gapping area that I had actually missed. I had shown just consistently all these bear gaps that the Qs and the NAS were just hunting. It was just a bear gap hunter all the way up here from the March low. And there was one at 376 to 380 that I missed. And so I think if I get you back into that short-term chart, would be a really good target for us to fill that before we could get a larger degree pullback. Okay, again, on the small time frames, I'm projecting weakness. If I'm wrong and we don't get the more extended weakness on Monday, what we're going to see is we're going to likely see this candle low hold at mid-morning Friday, and that just sets an internal 1-2. And that means this 4 is already done right here. And that's how we could get immediate bullish continuation. So I always want to be open-minded to some possibilities here. But when from the weight of evidence, I think I showed you market-wide, I think it's more likely that we do pull back. Okay, now, what would be a clue to something a little bit more bearish? And I think on the Qs, what we can see here is just the classic EW invalidation where this 4 can't trade into this 1. We've got our early identification here. This is at 364.77. If that happens, it is possible that because the Qs didn't set that swing high against the Friday, June 16th high, that we're actually getting a continuation of that degree 4. That opens the possibility, and you're going to notice from just a geometry perspective, that opens the door to some shortable structure. So we're going to be ready for anything the market's going to throw at us. If it is short-term bearish, we could potentially see this week's lows challenged. Not my primary look, but I'm just communicating the readiness in case during the week we need to make that switch. And that's one of the big benefits of being with me in my private group, is the ability to see that and make that change as needed. Okay, big names. I said, I think they're ready to show us some weakness. SPX and the Qs. Take a look at Tesla. And so here in Tesla, I'm seeing this, that we need the right shoulder. And it is a potentially very bullish pattern for later on, but do we need right here under a pretty key pivot at 265? That is an old gapping area that took a long time to fill, and it didn't stay above very long. That's a potential area here of supply that could have gotten rejected again. Do we see that need for that right shoulder? I think that's a very tasty looking pattern. Also for active bears, for active shorts, you got an opportunity. About Microsoft. Microsoft was a laggard today. While Apple was moving up, into more all-time highs, strongly up over 2% on the day. Microsoft with a possible bearish pattern here. And I had told my group when we had bought calls on the Qs right here on this 15-minute reversal candle, if Microsoft doesn't get in the act, we're probably not going to see much above the daily high. And in fact, we didn't make it. The better play there would have been SPY, but I thought maybe Microsoft would. So I think that's leading us to some potential weakness. I've got two possible degrees. So the more shallow wave 4 fits with that SPX thesis, or possibly that deeper 2 that would just lead to a deeper pullback. But again, I think that sets a really nice left shoulder, head, right shoulder, like I just showed you in Tesla. Okay, GOOG. Now, GOOG is one I've been telling my group for a while that I didn't feel very good about this as a bullish structure, and I could be proven wrong. We could get that purple count that I showed you on the Qs. GOOG is a name that to me just seems like it's just kind of asking for that lower low. So bears that are looking to be active on Monday, I think below 120, right in here. Take that short. You've got some structure up here to set a stop against. If we see early weakness Monday, this is another name you might want to put on the list for some active shorting. Okay, Amazon, another one, just cannot crack this 131 level. I have the possibility here for short-term weakness that leads to a move up to take it. And that would be consistent with what I showed you on my SPY chart. There is also the possibility that we truncated here this ending diagonal, this overlapping 1, 2, these 3-wave moves, 4, and maybe it just ran out of gas at that 131 pivot, and that could lead to a little bit more weakness. Again, where below that internal 0.618 fib, below about 128 in the middle of it, certainly you lose Thursday's low, and there that opens the door now to this pullback. Okay, and then Apple here. So Apple, interesting 15-minute closing candle. You know, Apple is a name that really tends to respect those traditional classic candle patterns, and this is certainly a bearish shooting star look. So does it fit my thesis for early weakness? Yeah, I hope you're seeing that. It's a weight of evidence approach. It always is. There's no guessing. There's no just we're only focusing on one thing here. We're looking market wide and we're looking to build a general thesis. That's the most powerful way to create a system market wide. And I think we could be looking here at that pullback. Okay, so that is where I want to leave you. Other individual stocks, crypto, anything from metals and miners, that's going into my challenge and advantage groups. And I want to encourage you to sign up for those. Is go to the Discord. The Discord is free and it is open, it is public. You're going to get a lot of great things in that Discord. I interact in the public chat, and I do post from time to time. I post public trade ideas, and also I post chart updates, but you're really getting my best. You're getting what I do continuously throughout the day by being in either the challenge or the advantage group at Pikes Peak Trades. And you're going to have those in the outro. You're going to have them on Twitter. You're going to have them in the bio of the video. So let's keep rolling with this bullish train, but let's be aware of some potential speed bumps here as we get into July. I think July is going to be filled with some volatility, which is great for active trading. But do you know how to do it? Do you know where to look for the dips? Do you know where to look for the levels above? And that's what I'm giving you here and able to do for you here through these summer months. So again, thanks for the support. Thanks for the likes. Thanks for the follows. We're having a great time. This is, I think, just one of the most satisfying and enjoyable market stretches that I've been in personally for a long time, enjoying doing it with you and looking forward to a lot more. Have a great weekend. Have a great holiday, 4th of July, if you're celebrating. And thanks for supporting here at PPT.